Welcome back to the podcast. Thank you guys for joining us again. Today we have a fantastic guest with us. We have John Squire, who's the general partner at Blockchain Ventures. And if you guys didn't notice, Max Avery over here, am I right? Who's my business partner in all that we do.
I have made the journey down.
Excited for this one. So, John, thank you for being here with us. I appreciate you taking the time out. I know that you have a very busy schedule. But I'd love to start, just give people a background on, who you are and what you do.
Oh, sure. Thanks for having me in. Thanks for inviting me. Really appreciate the opportunity to be here. As you mentioned before, general partner, Blockchain Ventures, working in really the seed and Series A venture investing area. Prior to that, spent 20 years building companies. So I was a tech builder, working in mostly data and then really early AI, nothing like what we see today, the amazing kind of computation that we get to use. But built a couple of different companies. First company worked on, we IPO'd. This is back in late 99, and took that all the way through to a really nice outcome. Then started another company with some folks and built out an analytics company. Ultimately sold that to IBM and had a great group here in Dallas that we acquired from IBM early on in that company. And then ultimately IBM bought us out later on. So spent a couple of years in IBM in the data streaming area, the middleware area, and then part of the AI group. Got an indoctrination there into those kind of like into really big data on a global scale. Left to build a SI business for e-commerce. Ended up selling that to a Japanese conglomerate, and then built and sold a couple more companies along the way. Started my career though in chemical engineering. So was a chemical engineer for Chevron, worked in the refining industry out in the Bay Area, San Francisco Bay Area, and really just saw the rise of tech and just could not stay away from it. So went to a business school at Michigan and came back directly just to work in tech. And then that's how I came through.
It's like Dolph Lundgren's a chemical engineer too.
Yeah, he is.
Yeah. So in good company.
The engineering mindset, right?
Yeah.
That's why, Elon and a lot of people have been successful. I think you're able to identify things and kind of break it down to simple principles on stuff. So, how did you end up with the fund? You had all these great exits and you decided, all right, I'm going to invest my own money and then maybe pull some other people with it. Like how did that happen?
Yeah, I met some really great people in the industry that I was in the retail tech industry. And so some folks that were incredibly entrepreneurial, and Ken Seif was one of those folks in the really early days. I mean, this was when we were talking about just maybe on the internet in the US, we would have $100 million of sales in a year. That would be phenomenal if we got there. And Ken was one of the early people that I met. He had a company called Blue Fly that sold kind of off-season luxury goods, doing really well. Was able to take it public. It was a $300 million cap business, doing really well. And he and a couple of the other guys at the time, we all kind of just worked together in terms of what's happening in retail. And a couple of years later, about a decade later, Ken starts a venture fund. It's all in retail tech and doing well. Sitting on the advisory board, working with a number of the startup CEOs and founders, and just helping them kind of guide them way. Okay, here's how you start a company. Here's how you get going. And Ken fell into this Bitcoin thing, and he saw it. He was like, I just can't unsee it. Like, this is something that I really need to understand. And actually came to the Texas Bitcoin conference, and I think it was 2013. Oh, wow. And he met Vitalik and Gav. He was standing right behind him, Gav Woods and Vitalik, and started to learn about what would eventually become Ethereum. And Ken said, I like you guys. I like what you're doing. I have no idea how this is all going to work out, but this world computer thing sounds amazing. I want to invest in you guys. So he wrote the first check for Ethereum. And this was, 13 years ago, 14 years ago. And just really got into learning about like, okay, how are all these pieces going to work? How are they going to be decentralized? And Ken told me this in 2014. I thought it was the most ridiculous thing I heard, because I was like a database guy. So I'm like, no, you build a database this way. Here's how AWS works. Here's how Azure works. Here's how Oracle works. Here's why Oracle doesn't work in the way that we want it to work. This will never work. And, 10 years later, obviously, all these things came to fruition. I sold my last company, and I put out a post that I was I'd finished out my year earnout and time with the company. And I was going to stop. I was going to go surfing. I was going to clean my garage. It was terribly cluttered after 10 years. And I was going to watch my kids graduate from high school. And Ken gave me a call and said, I think it's time for you to come to the fund. You should come over here. I know you don't think this is a real thing. Come and learn about it.
We'll teach you, young
Yeah,
grasshopper.
it was exactly that. It was like, you're so misguided early on. Let us explain this to you. And I was fortunate. I went and worked at with the Provenance team at Figure. I worked with the Spexy guys, which is Uber for drones, and then another L2, and just learned a lot about the tech. And definitely wrong. Like, amazing technology, going to change everything that we do in a fintech world.
That's awesome.
Yeah. Well, that's incredible. So you've had a lot of success with the fund. And we invest in venture deals and do some other things, but obviously the majority of our business is like managing the raw assets or the bare assets themselves. I think there's, a lot of people that maybe like, do you view the investments in venture and the private equity side kind of a hedge against the tokens themselves and like more of a picks and shovels play? Like, how do you balance those two?
Yeah, so I think there's strategies that are going to play out in every one of these capacities. The thing that we really honed in on is we have 7 partners in the firm. Of that, 5 of us have either taken a company public or gone from private to public. We've been one of the leadership folks. We've all worked for the most part in consulting or owned our own consulting businesses. And where we get really excited is kind of the commercialization of this technology. So for us, we're trying to look for entrepreneurs that are building incredible companies. And so much so that the way that we think about this is, when we see a new entrepreneur, is this something that just gives you goosebumps? You can't unsee it. You've never seen it before. And it's a new category with this amazing technology. So we focused our time really on looking for entrepreneurs and founders that are going to build equity-based businesses. They may have a token because it's an industry where we can do that. And we've really kind of not looked at being a hedge fund, buying liquid, or being in that area. Now, there's a lot of companies that can do well there, right?
For sure.
Like what you guys are doing in terms of helping people manage these positions. But we're really looking for the next Google, the next Amazon, the next Apple, the next Uber, the next, Airbnb, something that couldn't have existed until these technologies came out.
Well, I mean, I think you've already had a pretty prolific success rate on that. I mean, your fund 1 was like second highest returning fund for any venture fund ever. Is that accurate?
I think it's since they started recording it in '96.
Okay.
So there's probably funds before that did really well.
But
So
I mean, they would have to be relative for inflation to be anywhere close, I would expect. You guys have done very well. So what were some of the investments that you guys made? I mean, your partner invested in Ethereum early on, but that was through the fund or wasn't?
no, that was his personal
personal,
investment.
okay.
And so, he had a seat at the table of seeing how Ethereum was being built and kind of what the implications were of Ethereum. And then when Gav Woods left to go build Polkadot, that was one of the areas that Ken really looked at and said, I think this is going to be fantastic. When Juan was building out Filecoin, he said, this is something that we should invest in. And what ended up happening was that Gav and a few other, high net worth individuals said, I'd love for you to manage my money. Look, I can't do this. I want to build companies. And we're going to need somebody that, can look after this, can make investments, in other companies. And so Ken started the fund at that point. So
Okay.
the first fund at this point, we've distributed roughly $900 million on a $30 million fund. In that, Solana, Polkadot were, really nice outcomes for the investors. And then at that point now, Fund 2 has returned all of its cash back to the investors. That was about 3.5 years, returned all the cash back. And now that one's marked at around 5 or 6 times today. We have the figures in that fund. And so that one will have a distribution a little bit later this year also. So those are the first 2 funds. And now we're in fund number 5 that we just started raising. We raised last year because of some of the early successes we had. That one had a really high renewal rate. So
I bet.
our
Roll
raise
it.
was like
Keep
2
rolling
months.
it.
Yeah. Our raise took like 2 months. So it was a very, I would say, painless fundraising.
Well, and you guys play, I don't want to say downstream, but no more than 100 million, right? There's a lot of these players out here that'll raise billions of dollars, but the check size that they're cutting at that point kind of excludes them from some of the asymmetric bets. So you guys specifically keep it under 100 million per fund. Can you talk a little bit about why that's the best size?
Yeah, so we look at it deploying about 100 million a year, and we have a very unique structure that we built out for this. But one of the things that Ken and early on did was look at all of the venture outcomes over the last 30 years. And one of the things that he noted, just like looking through the data, and this is why I get excited working with Ken and Rob and the other two Johns in the group, is that everyone's really kind of like data and analytically driven. So we've all been business people before. We've all had to look through balance sheets. We've all had to like actually understand kind of the structure of a business. And so one of the things in the business of venture, when you look at what are the greatest outcomes, they've predominantly been early stage venture funds that are seed and series A. They've generally been in a brand new generational technology. So that's like semiconductors, compute, networking, internet, and so on. And they were $300 million funds. So a traditional venture fund, $300 million fund, deploys over a 3-year period. They save a little bit of dry capital for follow-on, but they're generally doing about a $300 million investment over that 3 years. So we've modeled our business in a similar way, $100 million a year. But instead of like spreading it out and like having little lumpiness, we're like, we want to play into what we think will be the bull and the bear markets. So we're going to consistently deploy over that 3-year time period, $100 million each year.
And like, what's the normal check size that you guys are writing? Is it $500,000, $1 million, 5 million? Like, how many companies are you guys betting on, I guess is my question, per year?
Yeah. So last year we invested in we had 23 investments. We deployed just over 90 million. I think it was 93 million is where we deployed. And in that, our check sizes generally for a net new investment is 2 to 5 million, maybe up to 7 million. And then we have some follow-ons that are from 5 to our biggest last year was 19 million.
Oh, wow.
And so with that 23, you can see like we had a good handful that were like 3 to 4 million. And then we had some bigger checks for follow-on. And the thing that's unique, that we think is unique as we look at this, is that the follow-ons have to meet the same criteria as the early stage. So can you get that same type of venture power law outcome out of the follow-on? Or, at that point, well, that's something for a Series A or a Series B investor.
Mhm.
I mean, that makes a lot of sense for, significant returns and asymmetric bets. Has everything that you guys have picked been winners?
No.
Or
No, I mean, we're in the early stages, right?
Right.
So a lot of this is around what's the possibility of this business. And I remember being at grad school and going into these finance classes, and our finance professor was talking through, and he's like, look, here's what's going to happen. In venture, you're going to have 10 bets that you make, 10 investments. Out of that, if you get one that is just absolutely phenomenal, like that's what you're hoping for. And then you're going to have one that dies super, super quick. And he goes, your whole thing as an investor, and I wasn't an investor then. I wanted to go into tech, and I went off into networking. I love networking. And the whole thing was, what you'd love to have happen is that, the other 2 that are going to be probably good outcomes. So you have 3 out of the 10 that are, that really drive the returns of your fund. The other 7 aren't the living dead. They don't just, consume your time, your energy, and you want to have them go along. He's like, you'd love to have them all just die right away. Like you do it, they go, you're like, it was the wrong time. It was the wrong tech. It was, we didn't manage it right. Like we didn't have the right talent, all these like this whole recipe has to come together. The hardest thing in venture is when you have a company that's just, it's almost there. And you want to spend all your time with it, but you only have 168 hours a week. That's it.
Do you think that there's like at this point in the fund and running these things, are you having a lot of people send you pitch decks and bring deals to you, or are you guys still going out and actively kind of working your network to find things that are interesting to you for the most part?
Yeah, I think if you have an email address and you have venture on your website,
You start getting everything.
you get a
That's-
lot. You
yeah.
get a lot of decks.
Yeah.
The
Is that
way
where you're finding a lot of the things that you
No.
like right now, or
no, cold inbounds.
Yeah.
I don't think I've seen anything in a cold inbound, and neither of the other 2 guys that are in sourcing, Rob and Matt, would never see anything on a cold inbound.
Yeah.
Almost everything that we get is either walking the floors at the different conferences, or like last night, I went to the Giants game. There's an AI conference in town, Human X. Some of the AI guys that I've known for a long time were in town, and we were talking. They're like, "There's somebody I need you to meet. Like, I absolutely need you to meet this person. They're brilliant. They're doing something in blockchain, but it's so far out there. It's so different." And I'm like,
Perfect.
that's what we want to see. I mean, our whole thing in the fund is we talk about this like when you first heard something, can you and you heard it, would it be impossible to unsee it? Like if you can't unsee it, you're like, all right, this one's going to grind at me for a while. And then when the person pitches, whoever the founder is, he or she, if it just gives you goosebumps, you know that there's something there. Now the hard part is like all of us, like if you get goosebumps, it's hard to like give them to Jake. Like Max, you get them and you're like, oh, I got goosebumps. You're like, I didn't get them. So you got to like somehow be able to like package that all up and tell the same story, or a story that gets everybody else really excited about that offer.
Yeah, they all need that visceral response of like, okay, yeah, this is game changing. It's gonna matter. They're solving a real problem, and it's going to generate value. And there's a commercial model behind it also, because that's sort of seen for a lot of blockchain projects is they build a cool tech like in search of a problem, instead of defining a problem and then building a solution for that. But you guys have run and scaled and exited multiple businesses, so y'all, I'm sure, like that's what the criteria is the majority of the time.
I mean, that it was true in the early internet day. It's true in every tech thing. Like we have really brilliant people that want to build something and they come up with it and then they're like, okay, what can I do with this? I'm not sure what I do with it. And so, I think the best entrepreneurs are ones that have this commercial mindset. They also have this tech mindset, and then they have this ability to lead people. And so you're looking for an entrepreneur that can go through this point and say, look, I have the persistence to grind out and build the first part of the company, but then I'm going to have to manage some humans. I'm going to have to manage a few folks. Then I'm going to have to lead this big group. And so that narrows down folks that you feel like would be investable, like the ones that you can get to and say, these are individuals that can go through that whole pathway. Because the greatest companies, the greatest outcomes, if you guys, close your eyes, you can look back at like the mid 90s or the early 2000s, probably the best investments ever are places where the founder is still there 10 years later. They're still there. They're still at this time.
Zuckerberg and
Larry, Sergey, they're still in the business.
Well, but to your point, not everybody can go through those different phases, and a lot of people have ego, right? And they don't necessarily want to hire a CEO and move to the board. They want control, or they don't see the bigger picture. A lot of times, business owners that I've worked with in the past, when I was doing M&A, they want all of the little pie, and they don't understand that if they were to allow other people in, and hire people that were smarter than them, or give up some of the pie, that pie will be a lot bigger, and then by proxy, their piece, even though it's a smaller piece of the pie, it's much larger. So yeah, it's like 8% of people that start a business or start with a business are there at IPO, and most founders end up around 13 to 15% of equity left when they get to an exit. If you've got to an exit, right? Like,
well, you're gonna exit one way or another.
Yeah, that's true.
A good exit, hopefully, is the outcome. But
so, I mean, you've had this great success with these first two funds. I mean, you're on Fund 5. You're deploying capital, but sounds like you've it's less about theory at this point. It's more about like actual problems that are being solved with the tech, the utility of it. So what type of companies are you looking for? Because I'm sure there'll be people that watch this that are working at some of these companies that would love to talk to you.
Don't cold pitch them, I guess.
Yeah, don't cold pitch them. You're gonna have to email us, and we'll make an intro.
Go lurk at a conference somewhere.
Yeah, the way that we saw how this industry will likely evolve is very much like how the semiconductor networking, internet, and I've said that before. There's this time where protocols come into play. And that protocol period, there's 3 to 5 years where you're trying to decide whether this protocol is actually going to work. And once that gets solidified, then all of a sudden an industry can be built around it. And typically you have the protocol period Then you have an infrastructure period, and there's usually great outcomes in the infrastructure, but they're a limited number. It's when you get to commercialization. So in many cases, that's software, it's an application, it's something in the cloud. In a lot of kind of last 25 years, it's been consumer based. I think when we look at blockchain, we're going to look and say this was the B2B kind of time for us. And so that commercialization area is where we really look to make investments. We think that the commercialization phase of almost every one of the technologies that have come before that have been next generation, groundbreaking, that have made the greatest outcomes for investors, it's always that mindset of a commercial individual that kind of drives that forward. So that, back to your point, like, looking at founders that have a great idea of technology, but they don't have a business plan or what the business problem is, and they're trying to, say, hey, I made a hammer, I just need nails. Where are the nails? Like, let me go find a nail. They're probably not going to be as successful as those that have like gone through a business problem set. And so I kind of struggled through that a little bit. But what I would say is that we see a lot of people that are, have some gray hairs. They've been in an industry. They've seen kind of like, hey, here's all the intermediary pieces that we have to parse together to make a solution work. Sort of like Figure. So like Mike Cagney, Cagney looks at the HELOC business and goes, look, this business, it costs $12,000 to $17,000 to originate a HELOC. It takes 45 to 50 days. Each one of these, we have a high attrition rate. I think I could do this better. He's knocked this down now. He's knocked out 90% or almost 95% of the cost. So this goes from a $17,000 activity now down to about $1,000 or a little less. The big one is that, all of us as, potentially homeowners, we look at it and we're like, yeah, I'd like to get a HELOC, but you know how long it takes to get there?
Pain in the butt.
45, 50 days. You can do it in 5 days. And I heard this whole thing from Mike and the Figure team, and I was like, all right, I'm going to try it. And I did it. I was like, okay, it was the least painful thing that I've done. It was super fast. When the notary comes over, if you've ever bought a house, you have this stack of papers you fill out. Mm-hmm. This thing was like 4 minutes. The guy was in, out, done. I was like, great. Checks in the bank. I'm like, all right, now I can start using it. It goes right into your Figure Markets account, and you can, if you wanted to, you could buy Bitcoin right away. You could, trade on this right away. You could use it for all the things you're supposed to be using.
Yeah, right. Well,
but so those types of things, it's like, that was somebody that had a really good sense of what's happening in the market and said, I think I can fix all of these little inefficiencies, and I can bring something to a consumer and to a business, because he's originating $1.2 billion in HELOCs now a month. And that's not, Figure's not doing it. It's all of the business partners that are using his pipes to run and
distribution.
Yeah.
I mean, you have to have distribution. When we talked to him, I had him on the podcast November last year, and he was doing $750 million a month at the time. So almost not quite double, but 150% from where
he did 390 last week. 390 million last week.
Can buy another pinball machine, I guess.
Yeah.
He's got quite the collection.
Yeah, he does. That's half the questions on the AMA is when are we gonna have a pinball tournament?
Yeah, it's been wild to watch the success there. So Hash, the token, and that's another one. Like, the business is fantastic. You've got some of these businesses like Hyperliquid that have created this perps market, right? And it's crushing it, and the business makes a ton of money, and then they're using the revenue to buy back the token in order to be able to drive demand before they get other distribution and other people have demand. So is there anything like that? I don't know if you can talk about Hash or not, but they've launched
the token.
The
Hash.
token. Yeah, not the drug.
Just for the YouTube censors that are listening.
But yeah, so I'm sure that they're probably going to drive liquidity into that and use it in some capacity with what they're doing. But they've gone public now, and they use that network. They use Provenance. The first time I ever heard about Figure and Provenance, we were looking at different avenues to be able to tokenize the SPVs, because we have a end-to-end fund administration company, and they had already built it all out. They had KYC, AML, they had the transfer agents, they had the ATS, they had the broker-dealer. Like, it was already to market, and this was like 21, 22.
It's cooking.
Yeah, and then but we just still haven't seen the adoption of tokenization of private equity or really real estate, either one.
Yeah.
Do you think that that's still on the cards for them, or do you think he's just focused narrowly on the HELOC deal?
Mike and the team. So there's two Mikes there, right? There's Mike Cagney and Mike Tannenbaum. Tannenbaum's the president CEO. Cagney's on the board, and then also runs the foundation. So, so when I say Mike, I got to make sure I say which one here.
Yeah.
So a couple of things. So Figure, certainly I think what they did really well was along the way realize that we need to be really, really good at one thing. And so our one thing is going to be HELOCs. There's a great market there. There's 200 competitors. This is, a market that is ripe for disruption. So figured out how to do that at a really high scaling way. And then from that point have now said, we think that the next big market for us, there's twofold. There's two markets that they've opened up. One is the private car loans. And so Agora is now coming on. I think that's 2.3 billion that they're going to start bringing on to chain and tokenizing and providing that to investors to invest in. I think at this point right now, roughly about $200 million of the lending cash comes from private investors who are on Figure markets and, earning a yield on lending out. So I lend on there, and the rate is somewhere between like 8.5 to 9.5 that you're getting on lending, either yields, the token, the yield bearing token that Mike and the team have issued. And I think yields now is over $1 billion in terms of issuances. So it's growing. I mean, not anywhere where, Tether's at or Ripple's at or Circle, but it has a really unique use case for what it's doing. And then the other one that you probably missed was that that Figure now has their own stock on the ATS.
Really? They're trading their own Figure stock.
So your own Figure stock. So it's a full representation of the Figure stock with all of the rights and conditions that you have. And so Mike has been very public, Mike Cagney, that his belief is large corporations, when they issue stock, that there's a wide range of intermediaries here again that, don't need to be there. And that in the future, that most individuals will probably prefer a digital stock over a physical stock. And the reasoning behind that is like all the settlement pieces, the atomic pieces, but also when you own the stock, you can provide that as collateral.
Margin it. Yeah.
You can also lend it. So when short sellers are out, instead of your broker, getting whatever those
pay some premiums on it.
Yeah. So he goes through a lot. He went through just recently kind of the numbers on what a individual stockholder could have if they decided to lend out their own stock. It sounds really compelling, like what the short-term yields are on that. So, you have this thing that all of us could get our heads around. You're like, okay, auto lending, get it. There's a good opportunity there. But when you really start to think about this digitally native stock and what you can do atomically with that and the ways in which you can trade that 24/7, 365.25, that's massive. That's $50 trillion of trading in terms of what we do with stocks. There's something there, and we can already see it. Ondo, Securitized, in NYSE, NASDAQ, there's an explosion. One of our portfolio companies, Denari, they provide stock trading outside the U.S. So investors outside can come in and trade in 200 stocks, and it's full rights conditions for those stocks, and they're trading outside the U.S. So I think there's a growing interest here, and that's going to be another big one for Figure. But let me answer one other question really quickly. Sorry.
This is great.
The hash piece that you asked. One of the things around hash is that if you think about Hyperliquid, we're trading perps all day, and we have lots of transaction volume. In HELOCs, you don't have a lot of transaction volume, like big ticket items, flowing through 100,000, 300,000, and you have securitizing these. So not as much demand for hash. Once you get to the piece around car loans and private equity and stocks, you can start to see
much more volume,
a lot more volume. So there'll be a lot more usage. And Mike Cagney was very careful when he was first building this, that I want to be a U.S. based business. I want to be underneath, kind of
SEC
the rules and regulations, SEC, all those pieces. So hash, it took a lot to even get to one of the trading venues to get it. Now the foundation and the community has said, we want to move that to a central exchange. And so they're currently working on that. And I think that, more access, more adoption, we'll start to, see what the real market price is for it.
Yeah. Well, that's until it's traded at scale, you really don't know what the market's going to value it at. right?
Yeah.
It'd be really interesting to see how they scale that project and how it's integrated. So are they doing collateralized debt obligations with this too? Like, are they packaging up these mortgage-backed securities or other collateral, these notes, and then selling them in tranches like they were in 2008? Like, is that
So
the next?
yeah, so they are selling them in tranches. They are part of the thing that the team got really good at is how do you build a homogeneous set of HELOCs, and
Okay.
and how can you get these to the $250 million pooling clip so that you can then sell those out. After that, that's as far as I know.
Okay.
So
Well,
yes, I think they are pulling and the securitizing these. How that plays out the rest of the piece, I don't know.
right. Well, I mean, it's out of their hands at that point. They've sold it off, and somebody else is going to service the debt to that new provider that purchased the debt,
Mhm.
right? So, um, I mean, just the derivatives and the liquidity across all these different financial products, and then applying that to crypto, I think we're in for a wild ride. So, on that, what are you most excited for here in 2026 and 2027?
Yeah, I think for 2026, one of the things to think about is in 2025, a lot of the tourists that are in the industry that had come in, those, they've gone to other places.
Yep.
This is not the amusement park they thought it was. All the meme coin pieces have like kind of burned a lot of folks. And so you have real builders doing real things. And so I think, with the kind of rise of AI and just the amount of investment that's there, you have folks that are, chase the bright, shiny thing. They've run over to AI and they should. Like there's a lot of money sitting over there. If you think about the amount of money that was raised for blockchain, like 3 years ago, it was roughly 85 billion. 2 years ago, it was about 15 billion. Last year, I think the raise for venture funds was just shy of 10 billion. If you take the A16Z $15 billion fund, and that $15 billion fund wasn't all for just blockchain.
Right.
So you see this kind of ramp down of investment going into blockchain oriented companies. Now, for us, we've consistently deployed the same amount. We've raised the same amount. So, that's not something that we see as an issue. But what we like about it is that you're getting the folks that are really geared up to like be building businesses that are going to use blockchain. And blockchain's it's the third rail of the internet. When you look at it, like the internet before, really, really good at passing data around, really good at distributing information, really good at bringing people together collectively to consume, different type of media. And now we have this new piece of the internet, and it should have been there a long time ago. Like we should have had this thing on here that was like, oh, you want to trade something in value?
Yeah.
We digitize it, and now you can, pass these on.
Native.
You have ownership. I have ownership. I can pass it to you immediately. Everybody's clear on who has where it sits in the ledger. All these things, and it takes a while. You got to go down the rabbit hole and figure all this out. And you're like, wow, this is kind of a crazy new way to think about things. But this is, we think it's going to be much, much bigger than the internet ever
Right.
was. And the people that are building right now, kind of in that winter time period, if you go back and look at how every other technology went, the winners were some of the best winners come out of. So it's not winter, it's winners.
Love that. What I would agree with you. So when we've gone to conferences this year, and we've been to conferences every year for the past 4 or 5 years, the signal at these conferences is much higher than the noise here in 2026 and late 2025.
There's way less swag though.
Well,
Not getting as many
Yeah,
coffee mugs and
well,
T-shirts as
you
I
just
used
heard
to.
it was 85 billion, and now it's dropped to 10, so they can't afford.
I know there's a bunch of
t-shirts.
swag providers who are like, what happened?
I was getting calls from all the crypto guys. Now it's the AI folks that are trying to.
Bottle service is far down right
Yeah,
now.
yeah. Well, yeah. So it's 2026. I mean, you're going to be able to identify those players. Anything before we wrap up around regulations, how that's impacting things, and kind of what do you think is going to happen over the next, call it 12 to 18 months?
Yeah, well, I think as we got more clarity from the Genius Act, and I know we have the Clarity Act coming, just as we started to lay out rules of the road for people that are going to build in the U.S., that's helped a lot of really smart people to kind of come back and repatriate to the U.S. So that's been really helpful. I think, if we get some more kind of guidance from Washington just on, how's everything going to play out in terms of what we're doing from a blockchain and a crypto space, that's going to bring more, I think, seasoned entrepreneurs in. But irrespective of that, I think, this year we're going to see a lot more of the kind of adoption by mainstream and Main Street. I just went to DOS, the Blockworks DOS in New York. And the thing that was really surprising was, and maybe it's not surprising, but a lot more suits, a lot more sports coats, a lot less flip-flops. I didn't see any hoodies, and I didn't see anybody in some, kind of like bright purple suit, walking around, and no onesies. So, but if you go to ECC,
Yeah, very
you
different.
see that.
Right.
And so, there's this point where I think the industry is starting to bifurcate a bit, where you have very seasoned individuals, folks who really understand, the regulatory environment, who are coming in and, realizing, hey, there's something really here that's going to change our industry. I want to come ask questions. And I think it's really, really hard for folks that have established themselves in fintech or TradFi for 10, 20 years. They're kind of at the later stages of their career to go, all right, I got to go learn something new. But at DOS, you had a lot of those folks, and they're like, all right, I don't really understand how everything works, the decentralization pieces, consensus validators, how the tokens
these
work.
terms.
They're like, but I'd really like to, sit down and talk about this area that we're building into or how we're thinking about it. You're like, all right, this is good. 2 years ago, you didn't have that. Like, it was only the person who was way out on the edge in some like large bank who was like, I started reading about this and I want to learn about it. Now you have real executives coming in and saying, we're going to do something. We realize that this is important. And now we're gonna actually learn about it.
There's a lot of education that's happened in the last couple of years. We went to the Ondo Summit. We've been to CoinAlts since 2023, and even in 2023, there was still one guy at CoinAlts in a hoodie at the back of the room, which he got called out on.
It was cold.
But to see the space, I think the space is maturing, is what I
Yeah.
would call it. I don't, and then I do
Well,
see
we're-
the bifurcation.
We're getting older too, so
Well,
it's
that's part of it. That's kind of what we do,
Yeah.
working with people to
Yeah.
make sure that their assets are secure. A lot of the people that invested early have gotten a little older, have children, a
Mhm.
spouse, and they're like, oh, I need to be responsible about these investments. And it can't just be like in a sock drawer and,
Yeah.
it's millions of dollars at this point. So it's cool to watch the industry mature. So if anybody wants to reach out, if they've got a company or if they want to invest in your fund, probably more on the investing side. Like if you guys, think that this is something that would be in your lane, what's the best way for them to make an allocation, or when's the next round on the raise for you guys?
Yeah, so we'll right now we have an open window until May 31st for all new investors that want to come in.
Okay.
After that, then we leave all the remaining capacity for all of our existing investors. So everybody has a right to their existing capacity. So we'll chat with all of our investors, and then sometime in mid-September, we'll look at anything that's left. Last year, we were oversubscribed, so the new investors that we brought in after that May 31st piece, they went on allocation. But the easiest way is just to reach out to you, like if
Okay.
they're on here, that's
Yeah.
probably, and then pass them my way. Certainly, we're always looking for founders that are doing something that is really, really kind of novel, that's building a great commercial application, and something that probably, like when you talk to them, that gives you goosebumps.
Right.
And
So
so,
if we get that visceral response, we will definitely be
yeah, I'd love to
passing them along.
chat with
We-
them on. Are you guys going to go to Consensus?
We will be at Consensus. We'll be
Alright.
at Bitcoin Vegas. We've got multiple
Same. Like,
events.
I feel like we're going to be in the same places.
Yeah, that should be good. Well, again, thank you so much for taking the time out and, swinging by for this conversation. Again, if you guys feel compelled and you like what you've heard, we would love to make the intro to John if you're serious about investing. And you have anything else before we wrap up, Max?
I think that's it. This has been
All right.
good.
Well,
Appreciate you.
Thank you guys for watching as always. Stay blessed, and we'll see you on the next one.